All right, welcome to this next Multifamily Investor Nation webinar. Today, we're going to be talking about investor management as it specifically relates to apartment syndication. Now, these topics, these items that I'm going to be covering with you today could be applicable to more than just multifamily or apartment syndication, but that's what my specialty is, and that's what I focus on. So I'm going to kind of open the hood a little bit and let you kind of see some of the inner workings of what we do at passiveinvesting.com. I'm Dan Handford, one of the managing partners of this group called passiveinvesting.com. You can see it here on your screen. You can see our team here by just going to passiveinvesting.com and clicking on the My Team button. This is me right here. You can click on Dan Handford, and I won't go into too much detail about my bio, but I am located here in Columbia, South Carolina, along with our 4 children, all under 10. So I have a 9-year-old girl, 8-year-old boy, and then a 3-year-old and a 2-year-old girl. And we've been here for going on 12 years now, 12, 13 years now. And you can find out more information about my background and some of the businesses that I own and run, and I'm an owner in. So you can kind of check that out. And so you can go to passiveinvesting.com if you want to join us on one of our future acquisitions. We primarily acquire properties in the Carolinas, but we also look inside of Atlanta, Georgia, as well as Jacksonville and Orlando. And so you can go to passiveinvesting.com if you're wanting to join us for one of our passive deals in the future. Just click on this Join Passive Investing Club button at the top right, and you can type in your information there into the chat box, but into this little form here, and then my assistant will reach out to you, and we will get a call scheduled so you and I can jump on a phone call one-on-one to discuss your investment goals and make sure that we are a good fit before moving forward. So enough about that. Let's move forward and talk about investor management for apartment syndication. So real quick, I want to get a poll of the people who are joining us live. So go ahead and don't click it yet, but go find the button on your screen that says that you can raise your hand. Okay. So I want you to help me out. And oh, no, some of you didn't listen. I said, don't press it yet. Anyway, so for those of you who have participated in a deal and on the active side of the deal, on the GP side, and you have actually been able to raise money for a project, I want you to go ahead and raise your hand just so I can kind of see who we have on here today. So it's usually a good mix where there's been people that have participated and they have done some and they're trying to like sharpen that tool a little bit. And then there are some people that have not. All right. So there's about 15 of you or so, 14, 15 of you or so that have actually done that. And how many of you on here, just so I can see who's actually active on here, have not. And they're looking to put it into place though, right? So you're trying to get this information to say, hey, this is something that I want to do into the future. So I want to make sure I do it right from the very beginning. Okay. So raise your hand if that is you and you want to make sure that before you raise money, you have this in place, because these are very vital items to have in place before you raise money for a project. So good. I got another 30, 40 of you over there that are raising your hand for that one. So thank you for participating. And those of you who didn't answer, maybe you're just here, just trying to see what are the inner workings and do I really want to do this? Or maybe you're just asleep and you just didn't answer. So anyway, I digress. Let's move back and forward. And as most of you know, if you've seen any of my webinars, I don't go into a lot of PowerPoint presentations or anything like that. There'll be a little bit of a whiteboard presentation that I'll do with you today, but it will not be the majority of what we're going to do today. Most of it is going to be me talking to you about these various topics about exactly what our group, passiveinvesting.com, does. And so first off, I want to talk about this first question here about how to set up a process to manage your investors effectively, right? And there's obviously a lot of interconnected things that go on when it comes to investor relations, but there's really, I would say, 4 main things that have to do with managing your investors. Okay. First off, it's attracting investors, right? You have to know how to attract and acquire new investors for your projects. And that's something that you're going to always be doing. It's very similar to like finding deals. You have to always be finding that next deal. So you have to always be finding that next investor. Well, the second level of that is maintaining those investors. And so when you're putting together this process, you have to make sure you have these different components. So for one, again, number 1 is attracting those investors into your processes. Number 2 is going to be maintaining those investors. And what we're going to talk about is how can you build a fence around your investors so that the next time there's an offering available, they're thinking about you and that you're the one that's on the top of their mind, and they're just looking for you to invest, looking at you for their next investment. And number three is going to be securing capital. Securing capital might sound similar to attracting investors, or they might say raising capital, right? But technically, securing capital is you already have your investors, you've done really well at maintaining them, and now you're going to go to secure that capital because now you have an offering available and now you are ready to raise funds. And so those are the first three. And then, of course, the fourth one, which a lot of syndicators miss this, is maintaining the post-deal communications. So even though you might do really well before a deal, make sure you stay consistent with that because it needs to be able to move forward with it. So on your screen here, you should still see this this page, which is the investor management page. So I know Kara had asked about, is there something else you're supposed to be seeing right now? No. So I'm talking on this screen here and just going through these questions. And then I will have a whiteboard page I'll explain something here in actually just a few minutes. But right now, all you're seeing is on the screen here, but you should still see my video. So I should still have my video up here. You still should be able to see that. All right. And what's going to be really exciting, actually, speaking of maybe on the video here, I'm in the process. I actually just put a contract on a building, a warehouse building. It's actually like a flex space. It was like 1,500 square feet of warehouse, 1,500 square feet of office, and just put a contract on it yesterday. And we should be closing on it in about the middle of September, probably like the second week of September. And we're going to be putting together and using part of that warehouse space to build out a recording studio, which is where I'll start to do my webinars on a regular basis as well. So we're going to kind of, ramp things up a little bit, make a little bit better quality, and really start to make some big impacts for you as you're going down this path of learning about multifamily investing and potentially doing it on the active side, but also on the passive side as well. So those are the four things. You have to learn how to acquire investors to be able to, increase. So I call it raising capital, because most people, when they think of raising capital, is like, hey, how do I find investors, right? So that's kind of the first thing is the finding investors. Two is maintaining investors in those relationships. Number three is securing the capital when you have that next deal. And then four is making sure that you maintain the communications with that investor. So the one I'm going to focus on the most today, it's really kind of two of them. I'll touch on the other ones briefly, but really I'll touch on one other one briefly. We're not going to talk today about how to find investors. So on our YouTube channel, we've done some other webinars on that. You can go on our YouTube channel and just type in raising capital, and you'll find a couple of videos that we've already done on that topic. So you can go in there and get some ideas on how you can actually find investors for your next deal. But the ones we're going to focus on, the one primary one we're going to focus on is how to maintain the investor relationship and build that fence around your investors. But we're also going to touch on a little bit about the post-deal communications. And then we're also going to talk a little bit about the raising capital, not too much on attracting investors. But let's go ahead and go to that whiteboard presentation real quick, because this is a concept that I know several of you who have followed me, you have seen this before, and but it's always good to have the reminder of it. But I also feel like it's important for those of you who have, maybe this is your first webinar with us, to really understand this concept, because it could be a major game changer for your mindset when you're putting together this process. So I talked about those four things that you should be thinking about. And let me, I gotta move my screen just around here just a tad bit because I have too many boxes up. So on the screen here, you should see a whiteboard. So for those of you who can see a whiteboard and you see this big circle, and I guess it looks like a G, we'll call it a G, this big G in the middle here, I want you to just raise your hand just so I know that you're paying attention and the screens are working properly. All right, cool. So we have this screen going up here, and I'm just going to clear this out, clear all my drawings out, and I'll first have a disclaimer that I'm not the best drawer or what do you call artist. I'm not the best artist. Okay. I'm going to do my best here just so you can kind of understand what this idea is about. So I want you to get out a piece of paper right now. And on that piece of paper, I want you to draw something. Okay. I want you to draw something, a triangle, a big, huge triangle. So if you don't have a piece of paper out, get it out now. This will be very helpful for you. and just put a big, huge triangle on your piece of paper, just like this. Okay. And in the middle of the triangle, I want you to write the words investor triad. Investor triad. Okay. Just like that. Again, not the best artist, but investor triad. And on the top of this triangle up here, I want you to write the word no. Okay. K-N-O-W. No. Bottom left, I want you to write the word like. And this bottom right is going to be trust. So know, like, and trust. And you guys have probably heard this before, that know, like, and trust, right? And it's true that in order for an investor to get comfortable enough to be able to wire you $100,000, $200,000, $1 million for your next deal, you have to meet all three of these things. That investor has to know, like, and trust you. And so I want to do a quick poll with you guys real quick, and go ahead and find your chat box again. And in this chat box, I want you to answer this question. Which of these three things, know, like, and trust, is the most important? Which one of those three do you think is the most important to you as the is the most important of this investor triad? Is it know, is it like, or is it trust? Okay, so go ahead and find your chat box there and type it in. I see some of you getting the answer right. Not very many of you, but some of you are getting it right. So most of you are getting this wrong. So most of you are saying that it's trust. Now, let me back up for just a minute, and I'm gonna kind of open your mind just a little bit when it comes to this know, like, and trust. So most of you said trust, and then a few of you said like, and a few of you said no, right? And somebody even said all three, right? And it's true that all three are important, but there has to be one that's the most important. And even though like and trust are important, right? I would probably say the trust factor is probably the last one. It's one of the hardest things to get with an investor, and it is very, very important. But think about this for a minute. If you never get them to know who you are, they never have an opportunity to make an opinion as to whether or not they like or trust you. So the first thing that you have to do, and the first thing that you have to focus on in this entire investor relationship process, is getting the investors to know you, right? And that's, again, not that topic of knowing you is all about how to find and attract investors, that first part of the management process. It's not what we're going to focus on there in this webinar, but that's the most important piece right now with you, because there's a lot of investors that don't know who you are. So even though like and trust are important, they're not the most important right now for you, because you have to get people to know you so they have an opportunity to make an opinion as to whether or not they like or trust you. Usually the way the process works is somebody will come along and they will actually finally get to know you, right? And they start to travel down this path of likeness, right? And once they get to know you and they start to like you, then that trust will start to come across. And what's really cool about this triad is that once they fit this point right here, guess what they start to do? They start to talk about you to other people, and guess what? More people get to know you. So this is a cycle that can be an exponential growth. And I will tell you that we've seen it in our group, because in the very beginning, one of our very first deals that we did, we raised just over $2 million for, and it took us a full 2 months to raise that money. Whereas our deal that we closed in the end of last year, pre-COVID, we raised $14 million in just under 2 weeks. And it's because investors that have now invested with us for multiple projects, they have started to talk to other people about it. And it's an exponential growth once you hit a certain point. And so your investor relations process must be in place before you get people to start to know you, so that this process will continue to flow and flow really well. And Jason says no for accredited. Yeah. Yeah, you do have to know them for obviously a 506B. Obviously, that's definitely true. Obviously, a 506C, as in Charlie, you don't. And if you have no clue what I'm talking about as far as 506B or C, then go look up on our YouTube channel, type in securities, and you will see a webinar or a couple of webinars that we've done already on the security laws and kind of what to watch out for when it comes to mostly on the active side. If you're a passive investor, You don't usually have to worry about that too much. It's most on the passive side, but it definitely is good as a passive investor, kind of understand and know those different offerings and registrations. But once you get people to know you, this likeness and then going down to trust is all part of that second piece of it, which is maintaining the investor relationship, right? And right now, you probably maybe don't have a deal right now, right? Maybe you don't have an offering that you're raising money for. And how are you going to continue to keep that investor engaged throughout the process when you don't have a deal? And that's one of the things that's hard, because right now our investor relations process in our group is a process that's in place that helps to make sure that the investor doesn't forget about us. But if you do all this effort and all this work to try to attract an investor, they have a conversation with you and you've built that relationship with them, but then you don't do anything after that until the next deal, then they're going to forget about you, right? And so let me first walk you through what we do in the very beginning and what I call our high touch investor relations process. So when somebody goes to our website, and I showed you earlier, if they go to our website here, on the top right-hand corner, they click on this Join Passive Investing Club. They've gone to passiveinvesting.com. They fill out this form. My assistant gets a notification, and she jumps on a phone call with that investor and talks to them about scheduling an appointment with me. So she doesn't do anything as far as like talking to them about the investments or anything. She's, hey, this is Ann. Just want to call, I saw you fill out the form on the website. Want to get you scheduled to have a conversation with Dan Handford, our managing partners, so we can discuss your investment goals and see if we're a good fit, right, before we move forward. And so she has that high touch process of talking to them over the phone instead of just, here's a Calendly link, right? And Calendly is very important. We use Calendly a lot for our investors, but that first touch is we always try to get a hold of them. Now, if for some reason she doesn't get a hold of them, then she actually sends them an email and says, first of all, she'll leave them a voicemail saying that she's going to send the email. So they are expecting that email. And then she will send them an email saying, hey, I tried to reach you over the phone. I left you a voicemail. Here is a link to Dan's schedule or his calendar, so you can go ahead and schedule an appointment to talk with him one-on-one. If for some reason you don't find a good time that fits for you, that works or fits with your schedule, then let me know and I can jump on another phone call with you and we can schedule something for you on his schedule that's more convenient for you. Right? I time block my calendar. So I like to have investor calls on Tuesdays and Thursdays, and I block them out for usually about 15 minutes, and they'll have 15 minutes of wrap up after each call. The reason why I do it for 15 minutes is because if I do it for 30 minutes, then that investor will usually feel like they can spend 30 minutes on the phone call with me, but they'll respect your time more if you block it for 15 minutes. But if you go over a little bit, like most of the time, if I go over, the investor's like, are you okay to talk a little bit longer? And I'll say, yes, I don't have another phone call until 10:30. And that way they know when my next phone call is, right? And it allows you to be able to speed up that process. Another thing that we do that allows me to be able to do it using about 15, 20 minutes is we will send in that email confirmation to their appointment, we will send them a link to a video that we did that introduces our team to it introduces our team to them. It's usually, I used to spend, probably 10 or 15 minutes on the initial phone call explaining who I was, who Brandon Abbott was, and Danny Randazzo, who are other managing partners, and what their roles were and kind of what their backgrounds were. And it was all about us. Well, on these phone calls, you need to turn that around and talk all about the investor, right? And so plus I was saying this thing, 10, 15 times on a Tuesday or on a Thursday, and it was driving me nuts. And so I was tired of trying to say the same thing over and over and over. I mean, you know what that is, right? That's called insanity. And so we decided to get together. We went to a local video recording studio and made some really good high quality videos on, we actually did make some other videos that day, but we made one video that was for this process. And let me actually see if I can find that video for you, so you can kind of take a look at kind of the structure and the setup and kind of, what we did. And that way you have a better idea for maybe when you put together one of these videos to send to your investors. It wasn't very complicated, right? It was a very simple, straightforward video, but it's one that allowed our investors to kind of see who we were and a little bit about us. Let me see if I can find this real quick. Here it is right here. So I'm going to send you, for those of you who are on the recording, I don't have this available to post because it's actually a private unlisted video. It's only for our investors. But for those of you who are on here live, I'm going to share this with you so you can actually take a look at it and kind of see the video that we put together. So for those of you, stand by. There you go. All panelists and attendees. That's the video link that I send out to the investors so that they can actually take a look at and hear from each one of the managing partners individually, right? And so you can take that video if you'd like and watch it later. I wouldn't watch it now. Just click it, put it in your browser, press pause on the video, and then once we're done, which will be done here in probably about 15, 20 minutes, you can watch that video and kind of take a look at what's going on, what we did in that video. But that helped me be able to focus all my time and attention on the investor on that introductory phone call. And after the introductory phone call, here's a key little tip. So I like to have a high touch process. So whenever I travel around to various cities, and I like to reach out to my investors and say, hey, I'm going to be here, I'm going to be there, or wherever. I'm going to be in Dallas, or I'm going to be in Charlotte, or I'm going to be in Tampa, Florida. I just took a family vacation down in Tampa, Florida. And when I was down there, actually St. Petersburg area is actually where I was. And there's actually somebody on here from St. Petersburg, but I was down there for a little while. And so I got together with some of our investors and we had some nice meals together and cups of coffee and things like that. And it's the only reason why I was able to do that is because I make it easy for myself. And inside my phone, after every phone call I have with an investor, I program their name into my cell phone. And in the company field, instead of putting a company, because normally I don't really have any need to know the company name in that respect, I just put the word investor, and off to the side of that, I'll put the city and state of where they're located. And if it's a smaller city, like say it's Riverview, Florida, right, which is down in the Tampa area, I would put Riverview, Florida, and then I would put Tampa. And even if it was St. Petersburg, Florida, I would still put Tampa because I want to put the largest MSA of where I might be flying into. And then I can search my contacts for a city, and all of those investors in that city will show up on my phone. And I can easily just text them on my phone and say, hey, I'm going to be down in your area. Wanted to see if you wanted to, get together for lunch or for dinner. Or if I have a lot of investors in there and I have a little more or I don't have as much time, a lot of times I'll text like 3 or 4 of them, or maybe even a dozen of them, and say, hey, you interested in going to dinner one night? I'm going to be down there on this date. We're going to have a couple of investors coming along and we'll have a nice meal together. Right. And that's another high touch process. And it's another step, another layer of making sure the investors don't feel like another number, right? I want them to feel like we have that relationship with them. That's all part of building up that likeness and that getting them to the point of being able to trust us. So once that's done, though, I'll actually text them my contact card as programmed into my phone. I'll text them that contact card, and my contact card, which has my name, my phone number, my LinkedIn address, my office address. So however they need to get a hold of me, they can email, they can get a hold of me, right? And I send that to them right after the phone call and say, hey, thanks for jumping on a phone call. It was a pleasure speaking with you this morning. Here's my contact card, so you can easily add all of my information to your phone. And they'll usually reply back and say, hey, thanks. And now I know I'm in their phone. And so the next time I text them, guess what? My name's going to show up. And I want to make sure that happens because I'm going to be reaching out to them when I'm in their city and I'm in their area, so that they actually know, know who's actually texting them, right? And then after that, I will, while I'm on that phone call, I always get their mailing address. And that mailing address is important because we send out a printed mailed newsletter. I don't have any extra copies right now. Our August edition just got dropped today, actually. Every month we send out an investor newsletter. It's usually 12 pages long. And inside that newsletter, we try to write articles that we feel like the investors would be interested about. So the article that I wrote for the August newsletter was about cap rates, right? And why our group likes lower cap rates, not higher cap rates, and kind of the pros and cons of buying in a lower cap rate environment versus a higher cap rate environment, and what actually moves that cap rate in a market and how it works, and all the different nuances around cap rates. And I know some of you who are on here are already our passive investors, and you're going to look forward to that article because it comes out every single month to our investors. And I get so much great feedback about that newsletter because it is detailed and we do take time with it. And each one of our partners actually writes an article in there. And we also will interview one of our investors and include them in the newsletter as well, so that they can be a part of the newsletter. And that also will sometimes take that and go bring it to a friend and kind of show them what they're doing. And it starts that conversation as well. That goes out on a monthly basis, and it's a printed newsletter. So we get their mailing address. And some of you might be like, well, why don't you just email it? Well, the reason why we have the mailed newsletter is because we do send out a mailed, like monthly, we call it our monthly report, that we send out to all of our investors. But the problem is that only gets about a 45 to 50% open rate, which, if you know anything about email marketing, that's a phenomenal open rate. Normally you're looking at about 10 to 15% tops, maybe 20% if you're lucky. But obviously our email list has been very well cultivated, and it is an email list that people have purposely want to be a part of, and we consistently send emails from it. So it's not a stale list at all. So we get a really high open rate, but I still sit back and I look at that and I go, but there's 50% or more of those people that are on our email list that aren't getting our emails. And so this mailing list allows us to be able to have another way of communicating with our investors, and we can almost guarantee 100% open rate. And then when we have our next offering, we print out, I actually have one of those. We print out, you can see it here on the screen. We print out an actual notebook. So you can see it here. I'll try to give you a little bit of a view of it. I don't say little, it's about a 70-page, almost a little over 70-page notebook on the investment offering. And this gets mailed to each one of our investors to that mailing address, so that we can be sure that they are aware of that next offering. Because I've had investors that have gotten upset because our investment filled up in 2 weeks, and then they didn't reach out to me to see if there was next offering until like after it was already filled up. And I'm like, it's probably in your spam box. And they go and look, and sure enough, that email got caught by their spam or their junk box, because it's being sent to 2,000 plus investors, and they missed out on the deal. They got upset with me. I'm like, well, I got to figure out a solution to try to fix that, right? And so that's what we did to solve that. Is we started to get everybody's mailing address, and we also started the newsletter. And I feel like the newsletter has really helped to build the likeness and the trust with those investors even more. It's something they can physically touch. It's also something that instead of just reading it on the screen, they can take and they can read it. They can give it over to, they can have their spouse look at it and read it, kind of be familiar with what they're doing and be on board with it as well. So the next thing that we do is we cultivate make sure we get their cell phone number. And that cell phone number we get because we will add them to a text message list, and we tell them that we're not going to blast you a bunch of times with the text. We're going to send you one text message when we release a deal. That way you'll know it's been released. And the text message usually just says something on the lines of, hey, just wanted to let you know we released another deal. Go check your email. It might be in your spam box, right? And that way they're aware of it, and it's just one text message and that's it, right? So that's another way that we do to try to increase that's. I know Kylie was asking here, what's the way to get better email click rate again? And that's, for one, don't put a bunch of people on it that haven't said, hey, I want to be on that email list. You want to make sure you have a highly cultivated email list. But being able to have information that they want is important to be able to get that high open rate. But to get 100% open rate, you just get their mailing address and start sending them a newsletter every month too. And that way, the newsletter helps us to make sure that the mailing list is current, right? So every month you might get 1 to 2 to 3 investors that move or whatever, and we get that mail back, and we can update that mailing list so that the next time you have an offering, we can actually send it out. And then of course we have the text message. We can send that out via text message as well. And that again will increase the open rate on those emails, because we're sending them a text message saying, hey, go check your email and go open it. Right. That's one of the things that we do. Now let's move away from this just a tad bit, not too far. But I want to talk about the transparent communications. So we talked about that the fact of how to maintain those relationships, and hope you have a better idea about how to maintain relationships with your investors as you bring them in. But the next thing we want to talk about is about how I'm going to do a whole nother webinar on like securing capital. It's totally different. But on the last one, which is post-deal communications. And also we'll talk about this distribution schedule, and then about issuing K-1s. That's all about that post-deal communications. Well, right now with COVID-19, it's been very important to have transparent communications with the investors so that they know exactly what's going on with the asset during this entire time, because there's a lot of unknowns in this in the market right now, and the investors want to know how their asset is performing. And so even before COVID-19, we actually send out an email every single month. For every deal an investor's in, they get an email from us by the 14th of every month, not the 15th, not the 16th. By the 14th of every month, they get an email, and it'll update them on how that property performed during the prior month. It will allow them to have an update on the occupancy status of the property, the pre-leased occupancy, the collections of the property. Normally we didn't include the collections percentage because it wasn't as big of a deal. But now we include it in there because, investors want to know how are things doing, because of COVID-19. And then we'll talk about any type of renovations that are happening, interior or exterior. We'll include pictures of those, community events that are happening, how we're marketing the property. And if there is some sort of a problem, we'll talk about that and say, hey, here's the problem, and this is what we're doing to address the problem. Right? We want to make sure the investors are aware of the good and the bad, right? We don't want to just always give them good. We want to make sure you kind of intersperse in there the bad, because there's going to be issues, right? It's not going to be a perfect investment every single time, but you got to make sure that you communicate that with the investors so that if there are issues, they're aware of it now, instead of like wait until it gets too bad and it's it's a lot more of an issue to be able to talk to the investors about it at that point. But having that monthly communication is very important for the investors. And then we do monthly distributions. So instead of doing quarterly, we do them monthly. And it's really not that bad. Bad anymore. People would sometimes say, "Oh, it's a lot more challenging to try to do monthly distributions versus quarterly." As long as you know where your cash flows are and you can project them out, it shouldn't be that hard, right? And it's not that expensive either, because nowadays it's like 20 cents a transaction to send it out. So it might cost us, $30, $40 a month to send out a monthly distribution, which to me is extremely valuable. Because again, I'm top of mind with my investors, right? We had a deal that just closed on May 15th this year. This month in July, we've already sent out our first distribution. Investors are extremely happy about that. And they also get to see that they're starting to see that return right away, instead of waiting until the end of the next quarter, which is usually how most people do it. So they wouldn't get paid until October. Right? Then we get paid until the first distribution until October. So I want our investors to have those monthly distributions. They can see that cash flow coming in, and then they get those returns starting right away instead of waiting until the future. And it's also because I want them to be top of mind. So every month I'm hitting their bank account every single month. So they're seeing me every single month. And guess who? Again, they're gonna be thinking about on the next deal when they invest? Us. I want them to be thinking passiveinvesting.com. And lastly, before I open up for some questions, I'll open up for questions for probably a few minutes here, about 5 to 7 minutes. So if you have some questions, you can go ahead and type it into the chat box, or if you want to type it into the Q&A box, whichever you prefer, I'll answer them from both. But about the K1s. So K1s, if you delay K1s past March, then it's going to hold up your investors from being able to file their personal returns. And so we usually try to get all of our K1s out for all of our properties by the middle of March. March 15th is our goal, right? This year, I believe we got them out like the first week of March. It was like March 3rd or 4th or something like that when those K1s came out. But there are still some investments that I'm in. I'm right now in 25 different passive investments, and there's some investments right now that I still don't have my K1, right? Which is frustrating. And you don't want to get to the point where the investor is frustrated with you, because now that investor is not going to want to invest with you because they're frustrated with you, right? So don't make investors frustrated. And then make sure that you get those K1s to them on time so they can file that. So, all right, I'm going to open it up for questions here. Let's see what questions that we do have. Mark is asking, what system do you use to send distributions? It's with our local bank. So we have a local bank here. We've negotiated an ACH account with them and negotiated the discounts on and stuff like that. So most local banks will have the ability for you to set that up on a corporate account. So I would just reach out to your local bank and say, hey, I want to set up an ACH account with you to be able to send out monthly distributions, and they can easily do that. And the nice thing is you can actually you don't have to import all the information every single month, at least not in our system. You can use the same information, change the amounts, and if you need to change the amounts, and send them out. So it's fairly straightforward. Raja has a question. Hey, Dan, can you share some details on your CRM and any other tools you use as an investor management? Yes. So we use two different tools for investor management, mostly from the management side. For investors, we use Active Campaign to keep track of our investors. But once they actually invest into a deal, we also use IMS. And IMS, which is now called RealPage AIM, RealPage AIM or IMS, is an online investor portal and allows them to have access to all their documents in real time. They could update themselves for all of their ACH details, distributions, all that kind of stuff is all done on the portal. So they have access to that. They can log in, all that kind of good stuff. It also keeps track of all of our waterfall distributions and all that kind of stuff. So that's the software we use to be able to manage the investors when it comes to the investment side. Now, IMS also has a quote unquote CRM. I don't want to say similar, but they say it's similar to Active Campaign, but it is not similar. So we choose not to use their CRM tool because it's not as robust as Active Campaign. And so we chose to just stick with Active Campaign for our CRM itself. Let's see. Tamon's asking about the CRM system. Answered that question as well. How do you take care of your distributions through a bank directly or use a third party service? We use it through our bank directly, right? So we have each month the property management company will give us our owner draw, if you will, off of the cash flow accounts, and they move that into our operating account at our bank, and that amount that is in that account, we will disperse out to the investors, and we do that through our bank directly. So it's just a simple IMS keeps track of all of our waterfall distributions. So it spits out what's called a NACHA file, NACHA, or NACHA, and then we take that NACHA file, upload it to the bank, and the bank takes care of it from there. So it's pretty straightforward, pretty easy to do. Are you going to be doing the MFI intensive that had to be postponed? So I am working on that, Charles, and the answer is yes. I will likely be doing it sometime in September because I know there's a lot of things that are happening right now. I wanted to try to do it at the end of July, and the conference room that I had reserved they still hadn't opened it up. So even if they haven't opened it up in September, I will likely go ahead and do it and just limit it to say maybe like 20 people and just keep it kind of a smaller group. It was already a small group anyway. It was I was only maxed out at 40 people the last time. So I'll cut it in half, do it for only 20 people, make it a little bit more of a close-knit group. And I'm even thinking about having a virtual component to it, but have not finalized some of the thoughts on that just yet. So I will definitely keep you posted on that, Charles, as it comes across. Do you recommend 506B for a first-time raise or 506C? I would recommend a 506B as in Bravo for a first-time raise, honestly. That's what we did. That's what most groups do is they'll use a 506B. Actually, the 90% of all syndications are 506Bs. Only about 10 to 15% of them are going to be that 506C. It's mostly because the 506Cs only really work if you have people that already know, like, and trust you, and you're trying to advertise to more and more people that you have an audience with, right? Maybe they haven't raised their hand and say they want to invest, but they know you and they don't mind. And once they hear from you, they'll want to invest. And then you can start advertising that deal. Michael's asking, what is IMS? IMS stands for Investor Management Services. And so RealPage, which is a property management software, just acquired them. And so they now have a software now called RealPage AIM. It's like, I don't know what the AIM stands for, something, maybe advanced investor management or something like that. I don't know. But that's who we use. And they keep track and take care of all of the investment side of things. When we have an investment to invest in, the investors will go to that portal to invest in it as well. What resources do you use to find 100 plus units? Are you using a listing website? Most of ours are going through brokers, Aaliyah. Most of them are going through brokers. Dan's asking, do you use Active Campaign for your email marketing as well as your CRM management? Yes, Dan, we use it for both. So we used to be with MailChimp, and then we switched over to Active Campaign and absolutely love Active Campaign. It's been absolutely phenomenal for it. Let's see. Does your bank also handle distributions to self-directed IRA investors with self-directed IRA custodians that require a deposit coupon? So, Mark, some of the investors that are self-directed IRAs, that's the only exception to our ACH rule. So we've made a policy now that if you are not a self-directed IRA, then you have to do ACH distributions because it's a lot easier for us. It's a lot less work. It's a lot less expense on the offering itself. Now, so there are a few self-directed IRA companies that will not allow ACH, so they only allow you to send a check. And so, yes, the bank does allow us to send an electronic check to them, and it'll include that in it as well. Let's see. Roxit is asking, do you hold periodic Zoom meetings or similar with your investors for a particular deal to give them updates besides monthly newsletter and email updates? So no, we do not. So we have not had to do that. Our investors so far have felt like the email communication has been sufficient. And if there's ever any issues, they know they can get a hold of me. Every single one of them has my personal cell phone number. They can reach out to me if they have any issues or problems or questions. But I know there are some groups that do that. They'll do a webinar once a quarter and kind of break down things for their investors and stuff like that. I'm not opposed to that. It's just we haven't done it yet. I haven't really felt the need for it either. Hey, Dan, I love the know, like, and trust framework and all the processes you have set up around investor management. What about broker relations? I imagine a similar framework can be used with them, right? Yes, there is. There's a similar framework for them. I will likely be bringing on Brandon Abbott, one of our managing partners, in one of our future webinars, so that he can talk about that. And so I know Melissa, who handles kind of scheduling a lot of these webinars for me, is on here. So I'll have her go ahead and make a note to make sure we can have a topic soon on broker relationships and how to build those relationships, kind of to make sure that they're meaningful, and so that you can actually have some good solid deals coming your way as well. All right, I'm going to take one last question here from Nicholas, and then we were going to wrap this thing up. Any recommendations on a company to create self-directed IRA that accepts ACH? So I know the one that I know that does ACH is a Equity Trust Company. Equity Trust Company does self-directed IRAs and accepts ACH, so it's not a big deal at all. So they definitely do that, and I think most of them right now are still doing check, which to me doesn't make any sense. But because especially when on the references for ACH, you can conclude that. But I think it has something to do with giving their employees access to the bank accounts or something like that. I mean, I don't really know, but the Equity Trust Company is one that I know that does do the ACH. So. All right. Well, I want to thank each one of you. I don't have my topics selected yet. We're going to sit down this afternoon with Melissa and come up with the next, probably 3 or 4 months worth of topics. And so she will be sending out an email about the topic for next week. And so make sure you stay tuned to your emails, and the recording of this session will also be sent out as usual to those of you who registered. I want to thank each one of you for being here and look forward to seeing you next week on the next Multifamily Investor Nation webinar.